Hi there, traders. This is Brad Goodwood with the Daily Market Insight for Friday, the 12th of May. Now, as we come into the Asian session, there's a few things you need to keep an eye on, but not really to the European session. Now, Sterling, Bank of England raised rates yesterday by 0.25. With the way the dollar has transpired over the course of the last sort of 12 hours, Sterling is 100 points lower. We'll see how that plays out. But keep an eye on the GDP numbers out of the UK. I'd say more importantly, this cheeky number down here, the manufacturing production numbers. This has always been a really high impacting number. It's missed by a lot of the calendars, but keep an eye on that. That's got a more connection with, obviously economic activity, retail sales, employment. That's a very aggressive number. And out of the US, today's numbers, the Michigan consumer sentiment numbers, I'll be watching those very closely, right? CPI, all the US numbers have been coming off. That may show us that, it's bigger than what we think. The initial jobless claims, okay, the biggest numbers in 1.5 years as far as the stats go. So that tells us, there's still a lot of pressure on the US economy. Don't forget, we've got this regional banking crisis still simmering away. I think it's going to be much bigger than what we think at the moment. That's creating a lot of uncertainty on the US dollar or on the US economy, I should say. Now, let me just come over here and show you some charts because we've got some weird activity. Now, if I just come back into the global markets, first of all, now don't forget the equity markets down here. They've got the Dow Jones Mini here, the S&P Mini, and NASDAQ. NASDAQ was up. Just trying to think who was, there were some shares there. I know Tesla, Elon Musk tweeted after the close that he's got a new CEO for Twitter. That went up, I think, there was a couple of other good firms there that went up as well, just off my mind at the moment. But then Disney and some of the regional banks are putting downward pressure on equity markets. Now, overall, they've ended up in the positive, but you know what? There's still uncertainty there. Now, what I was talking about with a couple of strange things happening now, what you've got to understand is we're seeing the US dollar, right, the dollar index, slowly creeping higher. That matches up with euro sort of drifting lower. The uncertainty with this regional banking market and everything else, the gold market must be that long. It's coming up to this trend line here. This is to me, a bit of a target as far as potential stop losses underneath this level. So just keep an eye. If you're trading gold and you're long, you might want to offload when it breaks that level. Tells me at the moment that the market is somewhat a little bit fragile, maybe too long for its own good. Oil downtrend in play. It's come back, just kicked above the resistance line again. Almost like looks like a little bit of a head and shoulders there, and starting to drift lower. And if you're on the cryptos, well, they're starting to get punished there as well. Now, let me just come back to the currencies, and you can try and work out which pairs to trade around this. Now, sterling, obviously, we've got some key data coming out of the UK, right? That's great, but you know what? We've had these snap down. And across a number of these pairs, euro, well, it's a little bit convoluted, right? I've been saying that all week, but check out the price action here on the Aussie around that level. That tells me that the market is, everyone's watching that level, right? Sterling market was long. Even I was anticipating a more hawkish Bank of England. If anything, they're like, well, everything's discombobulating globally. We may be in for a tough ride. After raising rates, it is lower. So all of that aggressive hawkish tone was factored in on sterling. It's just been cleaned out, right? A big stop loss run. Looks like it's found a bit of a base here just above 125. Aussie and Kiwi both coming under pressure. Now, this goes with the stronger dollar. It's almost like the stronger dollar. We have weaker Chinese numbers, weaker US numbers. It's like the dollar safe haven is back in play. Not seeing that really on dollar yen just at the moment. And dollar Swiss, I think it's rather confused with what's going on there as well. And you see as oil starts to break lower again, we're starting to see dollar CAD really sort of rocket to the top side. Now, don't forget the CAD, Aussie, Kiwi, the commodity currencies, they are all working in tandem, right? And when you come back and you look at the general global markets, I don't want to sort of overcomplicate things, but we are seeing the equity commodity markets get sort of belted. So, gold, safe haven, it's falling into the commodity sort of slapping there. So just be aware of that. At the moment, US equity futures are up. We're starting to see a bit of a risk on day, but it's not exactly clear just at the moment. You want to give it probably a couple of hours to see exactly what's going on. I'll see a red there on the cryptos, and that's all she wrote. So sterling's the main game here today, right? Once again, but with the markets, the way they're the US dollar is behaving, you think with weakened US numbers, we'd see the dollar lower and all these other pairs higher. It's not the case, right? If anything, you're trading instruments on their own at the moment. So if you're looking for correlations to guide you, it could be a little bit of a mistake. If anything, you're seeing Euro, Sterling, Aussie, Kiwi all behaving the same. Dollar index is up. I mean, dollar yen, it is still there. Dollar Swiss just coming back a bit, and dollar CAD up. So we are starting to see some uniformity on the currencies, but it's not exactly confidence instilling. I mean, to me, these are just cleanouts. And what I'm talking about is the market's been very long, maybe not so much long Euro, but they've been long Sterling, long Aussie, long Kiwi. I can't see, unless something happens, the US dollar isn't going to go up, right? The pressure's off the Fed of raising interest rates. The dollar should be coming off. Equity markets should be going up, and we're not seeing that, right? So when you recognize that situation, that's like just an err on the side of caution with your capital management. Keep trading if you fancy it, but decrease your trade size because everything doesn't match up, okay? The NASDAQ up and the other equity indices down. That's always a sign that something's not right. Uncertainty around oil. Don't forget weaker Chinese numbers, weaker global growth. That takes a bit of shine off oil. And here, I think gold, if anything, and I'm not a massive trader of gold, but this trend line support level, you got to see it clean out on the downside there. It is a bit of a target for me. All right, guys, that's it for me. Not that clear, but I wanted to just explain to you the strange conditions we have at the moment. Keep an eye on those Michigan sentiment numbers there as well, because to me, they are, once again, a good historical number, and also the manufacturing production numbers out of the UK. They're the two numbers. If you're looking for directional fundamentals, keep an eye on those two. Otherwise, just keep control of your risk management whilst the markets are a little bit discombobulating at the moment. All right, guys, that's it from me. Have a good weekend. Cheerio.